Welcome to The Facts. I'm Mike Austad, and this week my guest is Dr. Robert Wright, Augustana Professor and Neff Family Chair of Political Economy at Augustana University in Sioux Falls. We're going to talk about some of the initiated measures and ballot issues that had passed recently and the overall economic background in South Dakota. Dr. Wright, welcome to the program.
Thanks for having me, Mike.
You've got some experience and background in South Dakota politics and a background in economics. Tell us a little bit about what you do.
Well, I came here in 2009, and I've written a book about South Dakota and its history of entrepreneurship called Little Business on the Prairie, along with 16 other books. I have a PhD in economic history, and I taught economics at the University of Virginia and the Stern School of Business for a decade before coming here.
So you've been in South Dakota quite a while. There's been some ballot measures that affect economic freedom that the state residents, eligible voters, had voted on. Some initiated measures and things that kind of dictate limits to economic freedom or opportunities. And one is initiated measure 21. That was an act to allow the state to set prices or regulate interest caps on certain lending institutions. You've blogged about that, you've written about that. Tell us a little bit about what your study is and what your thoughts are on this initiated measure and where this is taking South Dakota.
Well, I'm interested in all South Dakotans prospering to the extent possible given the state of the world as it is. And there have been several ballot measures over the past few years that have greatly reduced individual economic freedom in South Dakota. And it's starting to hurt our economy, and it's definitely hurting our rankings from lists like Forbes, which just came out, where we used to be in the number 1, number 2, number 3 slots consistently for about 20 years, and we've dropped to number 10. And this is because majorities of South Dakota voters have voted to restrict the freedom of people to work for the wage that they want, and now to obtain loans at interest rates that they want with this Measure 21.
That's an interesting point. You think that South Dakota is in the 10th place. That seems pretty good, but we were much higher than that.
Yes,
in recent years.
That's
so
right.
Number 10 is kind of a slap.
Yes, that's correct. And these rankings are correlated looking forward with economic growth. So the higher you are in those rankings, the higher your economic growth in the future is, statistically speaking. So we can look forward to a somewhat slower growth in South Dakota in the next few years, unless we can reverse this trend.
What are some of those rankings that make up economic opportunity? It's got to be something with taxes, or
yes, and we're still very good we're still number 1 with low cost. But what people outside of the state see is that essentially at this point there are no more checks against what Alex de Tocqueville called the tyranny of the majority, which is 50.00001% of the voters voting for legislation that hurts the economy. There's nothing stopping that at this point. In the past, these ballot measures were, for the most part, about limiting the government's power. But over the last few decades, and especially the last few years, there's been a shift where they've been used in non-traditional ways to limit individual economic freedom.
And so these initiated measures, or these ballot issues, there were 10 of them. This one is initiated measure 21, where they're effectively voted to limit loan institutions with interest rate caps. It bypasses the legislature, in effect, and it's by just a majority. You say the tyranny of the majority. The voters go at 50% plus a 1.
Right.
To enact legislation against another opportunity or another segment.
Right, against this group of folks who were not being coerced into taking payday loans, right? Short-term, high-interest rate loans. They were not being forced to do so. They were going there of their own accord to get those loans. So why? Why would anyone do that? And the only plausible answer is because they felt as though that was the best thing for them, right?
Yep.
So then people from the outside who don't even ask these folks, why are you getting these loans? They just say, oh, look at the interest rate on that. It's 4 figures. That's outrageous, right? You can't do that. That's not what the borrowers are thinking. As I showed in an op-ed in the Argus Leader back last January, what these borrowers are thinking is, well, I can give $20 to this payday lender, or I can give $35 to my bank for an overdraft fee. Or I can give $70 to the snow removal people in Sioux Falls, because if I can't pay my my ticket within a certain period of time, there's a huge increase in the fine, right? So $20, whatever that interest rate is still less than the $35 overdraft fee, the $70 fine from the state. It's still less than the cost of being evicted from your apartment because you couldn't make rent, right? So it's not that these people are being duped, that they're being forced, that they're irrational. It's that many people don't understand interest rates or percentages and how they work, right? So I make a dollar this year, and next year I make $2. Well, by golly, I had 100% increase in my income. Yeah, well, you're still poor, because what matters is not the percent rate increase; it's the $1. And what matters with these small loans is the dollar amount that people are actually paying, and it's not outrageous. Short-term small loans are going to have what appears to be a high interest rate. Churches, nonprofits have tried to lend to that same segment, and they could not make it at anything close to 36%.
Mm-hmm. There's a lot of righteous argument, whether that's an accurate perception or not, that this was a savior. This was here to help the poor and prevent predatory. It's kind of it was a sell, and there were people on both sides of the aisle. There were pastors of churches. There were liberal college professors, and there was both sides of the aisle and church clergy coming together saying, we're here, this is going to help save. We should all work together to cap this and run these predators out and help these people, which was kind of the drive behind 21.
Yeah.
But you are saying...
Well, I mean, you allude to a point that needs to be made, I think, and that is that oftentimes liberals don't base their policies on the outcomes. They base their policies on their intent. So we intended to help poor people with this particular law, even though we have thousands of years of history saying that it's not going to help them, it's going to hurt the poor, right? But they still persist because, that's our intent, right, is to help the poor. And isn't it obvious that this is a help? Well, no, it's not obvious if you understand a modicum of how the economy works. One of two things is going to happen. One is, if this law is vigorously enforced by the state, it's going to drive lending underground, which means going back to the loan shark days, which means even higher interest rates and loans that are collected sometimes via the use of physical force. So our crime rates, which have been creeping up and up and up and up, they're going to keep going up if this law is vigorously enforced. The other possibility is that it won't be vigorously enforced. There will be various workarounds to it, and those workarounds will come with costs. That's why business wasn't done that way before, and those costs will be passed on primarily to the borrowers, these poor folks who we were supposedly helping.
Let's learn some more about Initiated Measure 21 and the effects of government intervention with Dr. Robert Wright on the Facts.
In the not too distant future, way down in deep 13, Dr. Forrester and TV's Mystery Science Theater 3000.
Welcome back to The Facts. We have Dr. Robert Wright, Professor of Economics and History with Augustana University in Sioux Falls. Thanks, Robert. We were talking last segment about thousands of years of history of precedent on what happens with borrowing and loans and some of the negative side consequences that we might not be taking into account by regulating certain loans. Let's go into more of that, what we were talking about with some of those negative side consequences and the history.
The church, by which I mean what they call today the Catholic Church, had a complete ban on usury, on the taking of interest. So essentially, instead of a cap of 36%, it was a cap of 0%. You were not supposed to take interest for any sort of loan. So the Muslims have the same restriction. What happened with the Muslims was they came up with all these fancy workarounds. So, interest is simply the opportunity cost of money, right? The time cost of money. They can't get rid of it. It's there. They just call it different things.
Processing fees, or
or and it's interesting because they take ownership stakes a lot of times as the workaround. So if you get a halal mortgage, the bank is actually a partner with you in the ownership of the home. So if the price of the home goes up, you share the profits with that price appreciation with the Islamic bank. And if the price of the home goes down, you both share in the loss. So it's a different way of approaching finance and has some interesting aspects. But what the Catholic Church did was it allowed some workarounds at first, which was basically allowing Jews, not Christians, to lend money at interest. They didn't have that prohibition. And so this is where the old connection between Jews and finance comes in, because it was one of the few things they were allowed to do was to lend money at interest in Christian countries. Over time, though, some Catholics say, well, what's wrong with making a little profit from making a loan? I'm giving something up for a period of time. Why shouldn't I get something in return? If I rent a horse or a house or what have you, I'm allowed to get rent from that. Why can't I get rent on money that I lend out? So that was eased. But traditionally there were still lending caps that so you could lend in Christian countries, but you couldn't lend at more than 6% interest or at more than 12% interest, depending on the time and the place. In which case, that was great if you were creditworthy and had collateral and could borrow at those lower rates. But it meant that a lot of people couldn't borrow. And so there were lots of people throughout history in Christian countries, super ideas, but didn't have a lot of wealth backing them up, and they weren't able to implement their business ideas. And so they were the poorer for it, and we're the poorer for it today. As people began to realize this, they started to loosen up the restrictions, and there were some gaping loopholes that were created that people who didn't have the credit standing to borrow below the usury cap could use in order to get loans at higher interest rates. And then the very worst credit risks often had to go to loan sharks, to these illegal lenders who very much like drug dealers would think of nothing of using physical violence in order to
maybe breaking kneecaps, or the old animated guy showing up with a baseball bat.
Or you remember the first episode of The Sopranos, that great HBO series where Tony and Chris Maltasani are chasing this guy around an office park in New Jersey because the guy owed him money.
Yes.
Yeah, and they end up pummeling him. So so either way, you're not these user caps are not really helping anyone or changing anything. If they're helping anyone, they're helping the loan sharks. And there's an example of a state in the United States after the Second World War that was essentially taken over by loan sharks. It's called Arkansas. Now, I don't know what you think of when you hear Arkansas, but I think of backwards, economically depressed area, right?
Okay.
But yet it's in the Sun Belt, right? So you might say, well, the Ozark Mountains are there. Well, it's not the entire state, and we know in South Dakota that having a part of the state being mountainous can actually be a boon, right? If you allow tourists and mining and timber and other enterprises geared towards the resources there, to thrive. But Arkansas passed after the Second World War a very low, very strict usury law, and so a lot of legitimate businesses and a lot of startups could not get the funding that they needed. So it came to have this kind of,
Unregulated.
well, yeah. I mean, there were loan sharks who were making high interest rate loans to poor people, but the cap was so low and was so stringently enforced that people who wanted to start businesses couldn't do so. So it came to have this, sort of unkempt, hillbilly-ish look to its economy for several decades after the Second World War, while the rest of the Sun Belt is thriving economically. But a lot of businesses from the outside look at Arkansas and they're like, we don't want to deal with that, so we're not going to relocate there. We're going to go to Texas or Oklahoma or Alabama or Tennessee or what have you, and they just stayed out of Arkansas. And then some domestic businesses like Walmart managed to fight through this, and then they kicked the loan sharks out, and they got rid of the onerous usury caps, and then the economy started to pick up.
So those
somewhat.
usury caps really hindered growth
Big
for
time.
people that wanted to finance in all different economic levels.
That's right.
And that's held them back even current.
Right. Now, this measure doesn't go that far, but we're on a slippery slope here in South Dakota because we've forgotten that these ballot measures are supposed to be restricting the government, not restricting what your neighbors can or can't do. It's restricting what the government can do to the people. But now we're in this situation where the people, or a part of the people, are dictating to a minority of the people what they can and can't do. And where does it stop?
These ballot measures limit the government to come back and make those corrections on some more on the amendment sides, but they bypass the government and follow the will of the majority of voters.
Yes, and of the voters too, not even of the people. That's one of the frightening things, is that one of these could pass with very few people voting for it, right? Something very complex, convoluted, and even a lot of people walk away from it. It's a majority of those who vote on that particular measure determines whether it carries or not. I mean, we could be in a position where two people vote on one of these things and everyone else abstains and it passes. And then, so we call it the tyranny of the majority, but in most instances, it's actually a tyranny of a minority who has decided for whatever reason, despite going to church twice a week, presumably, that they can tell their neighbors what they can and can't do.
Whether it's the government approves it or not, it's just direct. on those.
Well, yeah. Though my understanding is that some of these may be contested, and I think that initiated Measure 21 could be contested on the grounds that it breaks Article 6, Section 1, and Article 6, Section 27 of the South Dakota State Constitution.
Okay. Let's talk more about the state constitution and some of these ballot measures here in the next segment. We'll be back with more with Dr. Robert Wright on the facts.
KCPO Television is bringing the Retro TV network back to South Dakota. That's right, and Retro TV is better than ever with Doctor Who and Mystery Science Theater 3000, not to mention classics like Route 66, Zorro, Tarzan, Bonanza, Beverly Hillbillies, Petticoat Junction. You know, shows you don't have to be ashamed to watch. Call your local cable provider today and tell them to get back on the program with Retro TV. Shouldn't you be getting all the local channels?
Welcome back to The Facts. Continuing our discussion with Dr. Robert Wright, Professor of Economic History at Augustana University. Dr. Wright, we were talking last about the Constitution and Bill of Rights, and we think of the U.S. Bill of Rights, but there's some state constitutional issues that you have made note of regarding initiated Measure 21, which is a vote to limit interest rate caps, or to enact interest rate caps. How does this initiated measure conflict with the state constitution?
Well, Section 1 is supposed to guarantee to South Dakota citizens the right to life, liberty, property, and the pursuit of happiness. And it's definitely infringing on their property rights because it is taking away an avenue for them to limit the costs of them acquiring small funds for short periods of time. And Section 27 says that the only way that a free government can work is if it looks to fundamental principles. And fundamental principles would be things like those enumerated in Section 1, right to life, liberty, property, and the pursuit of happiness. And we seem to have forgotten that these ballot initiatives are supposed to be about limiting the government's power and not against telling your neighbor what he or she can't willingly do.
And that effectively is what occurs on some of these ballot measures. 50% of the voters plus one can enact something. It might not even be constitutional. And then it doesn't necessarily regulate the government, it regulates their neighbor.
Yes, right. So there needs to be some pushback on the unemployment law, which is of this nature, telling someone that they can't work for a certain wage, even though we allow large groups of people to work for nothing. Interns, for example, right, in college programs, they work for nothing, but somehow they're excluded from this. But another segment of the population, we say, oh no, you can't work for $7 an hour.
You've got a couple books out. I've got one here, One Nation Under Debt, Hamilton, Jefferson, and the history of what we owe on banking regulation and back to the Founding Fathers. Tell us a little bit about this book and some of the others on economic principles and freedom.
Well, that's about the national debt, which is an issue that's still hanging out there, and it's gotten much worse over the Obama administrations and may get even worse under Trump if he does what he purported to do during or promised during the election. South Dakota is still good on that. But apparently, again, we could have a majority of the voters who decide, oh, we can start to run up state debts as well. So they might be able to break our long history of fiscal responsibility in this state with one of these ballot measures. And then we'd really plummet in the rankings.
Mm-hmm. Dr. Robert Wright, Professor of History and Economics at Augustana University, thank you for being on the program.
Thanks for having me. It was great.
Tune in next week for more of The Facts.